Aircraft owners can face millions of dollars in unexpected tax if a purchase or delivery is handled incorrectly. Many buyers assume registering their aircraft in another state may protect them. It often doesn't. The states have become extremely sophisticated in tracking aircraft activity and auditing owners. Today, we're joined by Thomas Alston. He's a CEO and founder of Aero Marine Tax Professionals. Tom's widely regarded as one of the leading specialists in sales and use tax planning for aircraft and vessels, helping owners legally structure purchases and operations to avoid unnecessary tax exposure. Over the years, his firm has advised thousands of aircraft and yacht owners on how to navigate California's extremely aggressive tax environment, where a single mistake in delivery or aircraft usage can trigger millions in unexpected tax liability. Tom, California's gotten easier. They don't want to collect as much tax as they need, right?
Yeah, that wasn't sarcasm, was it? California's run by communists, and their appetite for taxes is never ending and ever increasing.
Let's start at the beginning. How did you get into the space? I've read about some of your personal stories that have got you really passionate about the space. You want to just give us a quick background of how you got into this space and what's kind of molded your strategies and reasonings for building this business?
Well, how I got into this space is one story, and what motivated me to want to get into this space is another story. So my motivation started when I was about 14 years old. It was Christmas morning. I come down into the room. I'm from a family of 10, so there's always a big stack of presents under the tree. And there was no presents under the tree, which is just an absolute shock to a young kid. But I did notice that there was little white envelopes in the branches. So I went and found one with my name on it. There was a note from my mom that said the camera that I asked for. She knew that I knew Santa Claus was a fantasy, so she didn't say Santa was bringing me. It was going to be delayed by a couple of weeks. I found out later that my parents were in a dispute with the IRS over income taxes, which of course is what the IRS does. And when we lived in Alaska, my dad was a contractor and he had a partner. The partner took off with the money and a bunch of assets and left him with the tax obligations. So this is now years later. In the early part of December, the IRS went into my dad's bank and took all of the money out of his Christmas club account that he was saving up to buy Christmas presents for his large family. I think that was a gutless puke move. And normally I use words a lot stronger than that because I have a lot of reality on what happens to anybody who goes to work for a tax organization. Where's a guy with a family of 8 kids going to go and hide?
Yeah.
It's ridiculous. So that was my motivation to be very, very anti-tax agencies. How I got into tax, this particular line of work, the California sales and use tax relative to aircraft, vessels, and vehicles. My son was 8 years old or so, and he went into, it's like Little League, even though in my town it was called Bambino. And I got to know a guy who was in the sales tax business. His company was the first group that created a company that defended businesses when they were being audited by the state of California for reporting and paying the right amount of sales tax. We became very good friends. Later in life, as I traversed on and I became a baseball coach, I brought him along as my pitching coach because we were still connected pretty well. And at that time, I owned the world's largest race car company. We built thousands of race cars. He did some sales tax work for us. Okay, that's where I kind of really got involved with him. Eventually, I sold that company and retired, I thought. But after about 2 years of being retired, I got bored and I asked him, is there anything I can do for you? And he said, sure. How do you feel about being my campaign manager? I'm feeling like I want to run for the Board of Equalization. Well, I've never done that before. So, of course, I said yes. So he and I negotiated the fact that I didn't want to be an employee. I just wanted a desk and a place to go and a phone. And he'd pay me 28% of the cash that I generated for his company. And we went along fine. After a couple of years, my little aviation section of his sales tax company became a very huge amount of his gross income. And he developed amnesia about what he agreed to pay me. So I developed amnesia about our agreement and I left. He told me at that time I can't steal any of his clients. I said, I don't need to steal his clients. I've created this whole little niche in this aircraft industry. Everyone knows me because I've been going out into the public and no one knows you. So it doesn't matter. I gave you the motivation, then I gave you the mechanics of how I got into the aviation California sales and use tax business.
And when did you start your own company? What year was that?
2002, I think it was.
Wow. And before that, how long were you working with the other business? So how long have you been in the tax space?
I actually don't remember that. I don't remember sure. I think it was like 97.
Okay. Over 30 years in tax. The structures of avoidance and evasion, and you've referenced a 1934 Supreme Court ruling about, how taxpayers have the right to structure their affairs to minimize their taxes. Do you think that's still, how can a 1934 ruling still hold up today?
Well, it can. It's not as long as there's communists and socialists in the government. In case you haven't figured it out by now, I'm quite a redneck.
Yeah.
But they don't ever pay attention to precedent. They just do what they want. And whether they actually even acknowledge that this decision was made in 1934 or not, they're all liars, cheaters and liars. So I believe them when they say they don't know about it.
So when we think the difference between tax avoidance and tax evasion, is there similarities between the two, or is it just?
The similarities is a reduction or elimination of tax. One of them's legal, one of them's illegal. Okay. Evasion is illegal. That's illegally doing something to skirt your responsibilities for taxes. Avoidance is using the law and the administrative codes to legally not pay taxes. And that it's not just you have a right to do it. The Supreme Court decision says you have an obligation as a U.S. citizen to minimize your own taxes. And today it's a very novel concept because there's too many socialists and too many communists involved with the government, especially at the federal level.
Well, if we look at California, right, the one of the harder, most stringent taxed states there is. Why would people own an airplane in this state when it could be so much more expensive to own it in this state versus maybe another one?
The reason they would do it is because they can legally avoid the sales tax as long as they structure it properly, take possession in the right place, and subsequently use it over one of the aircraft. One of the three methods of test periods. Two of them are 12 months and one of them is a 6-month test period.
Well, let's kind of go through step by step. Then the first step is taking possession of the airplane, right?
Yes. For business use airplanes, which means Part 91, the interstate commerce test is what we use probably 95, 96% of the time for aircraft owners. And to go back and answer your original question, why would anybody do it, is because they can legally avoid the tax.
Okay.
And to me, it's a very simple process. It's a lot of work on their part, the buyer's part. But when you buy a $65 or a $75 million aircraft, which is big Gulf Springs, your tax is $6.5 or $7.5 million. So it's a no-brainer that you're going to go through one of these processes. And you'd be surprised at how many of these major corporations that own these aircraft have absolutely no idea what they're doing.
Really?
So you take possession of it out of state. This is the interstate commerce test I'm telling you about. You take possession out of state. Then from the location where you take possession outside of California, and generally we do it on the left coast, it's generally done in Montana. Used to be Oregon, but Oregon, because it's a socialist controlled state, recently, which is within the last 5 years, created a situation where the seller was subject to a tax if the price of the aircraft was over $1 million. So Oregon is no longer the safe haven it used to be to take possession. You take possession in Oregon, then you have to fly to another state for business, not yet into California. That flight is called first functional use, which means you have to go to another city in the United States. Well, don't have to be in the United States.
Just not in California.
Outside of Oregon and not into California.
So Montana, take possession of Montana, move into Nevada where you have real estate ownership or something.
And then you bring it into California. The 6-month test period for this test starts the day that you land in California the first time. Then, starting with the first flight out of that California airport after you landed there the first time is when you start counting the hours. And it goes for 6 months. And whatever the total amount of hours that's put on the aircraft, the law requires more than 50%. We raise the bar to 60% because we know that by creating that 10% margin of error, the natural laziness of someone who's doing the auditing, they're going to give up after a while. I also know that because aircraft owners tend to be a little bit of a risk taker, that if I told them 50%, they'd try to bring it in at 50.1. If you ever submitted an audit to the state of California at 50, even 51%, all they got to do is throw out 1 or 2 of your flights and you owe the tax. So that's exactly what they're going to do. That's why we create a 10% margin of error, which can be quite a few hours.
So when we talk about 60%, it comes down to business use case. What could the other percentage be? Could it be personal use? Could it be charter? What's the anything?
Anything.
So you need at least, that 60% of business use outside of the state of California, though, correct?
Well, the flight has to start in one state and in another.
Okay.
And as long as the landing city is outside the state of California, and you have business support documentation for that, the flight counts and the round trip counts as long as you don't stay in that city for too long.
And then once you hit that in 6 months, what happens at that point?
Well, it's not when you hit it, because if you hit it at midway through the test and then lose it at the end of the test, you're done. So we require by our contracts with our clients that they stay above 60% at all times.
Okay.
Because we really want to keep their attention on it.
So theoretically, they could say, oh, as long as I hit the 60% by the end of the year, but you're saying, no, I need you to consistently keep 60% through the entire operation of this airplane the first 6 months.
And the reason that we do that is this. If you think you have 6 months to finish the 6-month test, human life will prove you wrong. All you have to do is look around. There was an issue, it's probably 10 years ago now. There was so much snow on the roof of a hangar, I think it was in Maryland or someplace back east, that the roof collapsed on 10 jets. Not one of those owners knew that was going to happen before it happened. So if it happened halfway through the test period, that ends the test period because you can't use the airplane for the rest of the test period. So that's why we require that you keep it up. It's our experience with what bad things can happen to you is the reason why we force these controls on you.
It's interesting. Okay. And you said there's 2 other tactics that you have to pass?
2 other possible exemptions?
Yes.
There's what's known as the principal use tax exemption. We use it very seldomly for airplanes. We use it mostly for vessels. Starts with out-of-state possession again. And then if you're a California resident, the property has to remain outside of California for the first 12 months.
And then,
if you're a resident of California. If you're not a resident of California, then it's a matter of 50-50 of being outside of California for at least half of the days. And we, again, raise it to 60% to create that margin of error for people.
You mentioned a resident of California. California has a very broad definition of a resident, doesn't it?
They use a definition out of the Department of Motor Vehicle Code. So when out-of-state CPAs are advising their clients and they're using the principal use test, they always miss this point. They presume that California uses the IRS definition of an out-of-state resident. And that is not true in California. California uses a DMV code, and there's A through I little things that can get you in trouble. Little things like if you have kids in school in California, you're a resident of California for the purpose of the use tax. When it was a college, there's resident and non-resident tuition. And I thought that that was a simple, straightforward black and white thing until my daughter was getting ready to graduate from high school and was looking for schools. And of course, kids who getting ready to get out of high school want to get as far away from their parents. So she wanted to go to school on the East Coast. But she found a website that kids could trade their resident tuition, non-resident tuition with each state so that you could be a non-resident of California and still get the resident tuition. So there's so many things that can happen that using the DMV codes that you couldn't possibly know if you weren't intimately aware of how this organization works and how the rules and regulations in California work.
You see airplanes that are registered in other states. Is California seeing through that, hey, I know this airplane's not registered in California, but it's spending X amount of time? Or how's California tracking that back? Like, is that a legitimate strategy to?
No, because you don't know about the residency, non-residency on DMV codes. If by law, every purchase of an aircraft on planet Earth is subject to review for use tax and sales tax, if it enters California one time and the state finds out about it within the first 12 months. So if you register, let's say a Delaware corporation, because that's where most people put aircraft ownership structures. If you do that and they find out about it and you don't file an audit, you don't, submit a claim for exemption in California, it's subject to a fraud penalty, which is 50% of what the initial tax was. So if you owed $6 million, they'll tack on $3 million to it.
Wow.
Like I said, it's simple to me, but I've done over 2,500 of these cases, and not one of my clients has ever paid a dime in tax. All you got to do is hire us before you take possession and follow all of our consultants' instructions. Really simple.
If you were to just start from kind of the beginning and just walk an airplane owner through this process, they purchase an airplane, they take possession outside of the state. Their first flight is to another business location outside of California. Their clock starts once they land in California for the 6-month 60% rule, where 60% of their flights have to be out of state business related.
60% of their flight hours.
60% of flight hours. And then what else is there? They hit all those things at 6 months. Is there anything else that they still have to do to stay protected against?
No, because the test period was established by the state. They decided it was 6 months long. So once it's 6 months and 1 day, there's nothing that you can do with the aircraft after that because it becomes subject to their review. So once it's done, it's done.
And then at that point, is your team accomplish what they need to do, or do people tend to keep you on for other certain needs?
We're not CPAs, so we don't do income taxes. So each one of these purchases is a separate start, change, stop cycle. Once the test period is over, we file the tax return, and then we follow up with the state until the client gets a letter from the state that says they owe zero tax. But that's a separate cycle.
And how many transactions have you done?
A little over 2,500.
Wow. And zero? You're 100%?
Yeah, and we can sometimes help people who have already bought airplanes who later contact us. It depends upon what they actually did and what they can support with documentation. And we try to help everybody because we don't want to give an extra dime to California. Absolutely.
What are those things that when people come to you after the fact, what are some of the mistakes that they've made?
If they try to file it on their own, we can't undo what they've already given the state. That's the number one thing is that people should always call us and talk to us first before they file anything with the state, because it can't be undone. That's probably the most, the most dangerous thing that they can do when they operate on their own. I mean, as many times we have a lot of clients that have already taken possession, and we are able to help them just because of what we know and how to operate and the right questions to ask. And it's surprising how many of the cases where people hire us after the fact, already taking possession, that we can't help.
How are people tracking? Who are the main people that tend to track these flights for the airplane owners? Is it the management companies? Is it the pilots? Who's tracking this, and what's the best way that you've seen people do it like the most successfully?
They all use different methods.
Yeah.
They all use, the one thing I do know is that pilots can and will not add correctly. They don't know how to do math. The mistakes that we find in aircraft logs are just because we are so familiar with them. We know what to look at. But when a guy lands in, say, Los Angeles, and the next time he takes off, he's in Fresno, something's wrong. They need to add up the segments. You cannot stack multiple flights on one line. That's the California won't accept that. Every takeoff and every landing is a separate flight to the state of California. So you have to, there's a specific mindset you have to have. You have to set up the guardrails of how to actually do that.
That's in a logbook entry, right?
Yeah. I don't know whether they use FlightAware or some other form or some proprietary software, but they're very aware of those things, and they absolutely do check them. In fact, I would warn every pilot, if someone is tracking your flights, like FlightAware, go on that software and check it periodically, because if they make a mistake and the state of California can use that to say that your return is fraudulent, they'll make it, and it'll make it taxable. They're gonna argue with you over it. So you have a responsibility to take control of your own the borders around your life and how those things are all tracked.
You talk a lot about kind of the hangar talk, maybe not a lot, but you mentioned things like hangar talk, right? Where different airplane owners or pilots are giving pieces of advice. What do you think are some of the bad pieces of advice that you've heard people give?
Just register it out of state. They'll never find you. Yeah, well, that's fraud. So if they do, 50% penalty of the tax, and that's going to shock the hell out of you. It really doesn't matter where the aircraft is registered, the state that it's registered in. If it's coming in and out of California, it's subject to an assessment by the state of California, and you have to file what we call a tax return, which is a request for an exemption. And you couldn't possibly know that if you're not a California resident. And you couldn't possibly know it if you're a CPA outside of California. You're going to operate from your very narrow band of knowledge about the way those things work. And nothing will get a guy in trouble more than listening to an out-of-state CPA say, well, they can't do that. The federal government protects you. No, it doesn't. Because, again, your aircraft is subject to assessment for tax if it enters California at any time, even one day, and the state of California finds out about it. You have to file a tax return to support that you meet one of the exemptions. And that's a very open-ended battle plan.
So if you're an out-of-state airplane owner, but you've got a lot of business in California or a second home, you need these strategies to protect yourself from the state of California assessing you.
The second home thing will make you a resident of California.
If you have a second home.
Codes.
Business use is often something that sometimes I get asked about. Well, how do people prove business use? I own real estate, or I buy real estate as a part of my business. I can just go say that I'm looking at a piece of real estate. How much proof do you need to prove that this is a business travel? What have you seen work and not work when people are looking at business use for their flights?
The safest way to do this is, if you're going to go out of state for business, is to send that guy an email to set up the appointment. And then after the appointment is over, have him send you an email that verifies the date and time and subject of the discussion. We use emails quite a bit to do business support.
That kind of solidifies both ends of that business travel.
It does until the state changes its mind, which they're in the middle of doing right now, violating exactly what the regulation says. That it says it doesn't have to be a for-profit business to support business use. And the state has always in the past, and always up until a couple of years ago, said that if you're making flights on behalf of charities, 501c3s, that qualifies as business. Very recently, they have started denying that without telling anybody in the public and without telling a firm like mine that they're going to make that change. They just capriciously did it. Someone up in the ivory tower decided, well, we're going to call that volunteerism. Well, that's not what the law, well, I don't say the law, that's not what the regulation says. The regulation says it doesn't have to be a for-profit business, but it's just the mindset, the socialism mindset. Your money is all theirs, and they'll give you back what they think you should have.
How often are you seeing changes like that within the tax structures?
This is the second major thing. Years ago, they changed you remember back, I was telling you about the first functional use flight?
Mm-hmm.
That didn't used to be part of the requirements. Someone up and high decided that they had to add this, making a flight with a passenger, and it had never been done that way before. The first time we heard about it, we said, well, no, wait a minute. I've got, at that time, let's say maybe had 800 or 900 cases already done that they had accepted no passengers. No, we haven't done that. That's just the way, that's their always automatic answer. Well, no, we've never done that before. Bullshit.
I've got a lot of charter customers that have got a charter business as a big part. People ask me, well, can't charter and that be a business and business use? What are the questions that you get around, folding charter into airplane ownership and its tax implications to it?
Typically, our clients who use the charter exemption, they are a private owner who leases their aircraft to a charter company. Okay, it's a 12-month test period that starts the first time the wheels go up after the change of possession. That starts the 12-month test period. It's 50% of the flights by law have to be for charter in the first year. And we again raise it to 60% for all the same reasons that I've told you in the past. The thing that's dangerous about that structure of you leasing it to a charter company is you put 100% of the documentation that you need to support your exemption in the hands of the charter company. So you've got to have a really good relationship with the charter company, and you have to feel like they're a very trustworthy source. And there are some not so trustworthy charter operators out there. That's all I'll say about that. So it's like anything else. Make sure who you're marrying.
Is that just another strategy that you would employ for sales and use tax, or is that's the common carrier exemption, correct?
Correct.
That would be the other strategy compared to the 60% owner use. There's a 60% charter use strategy.
Well, what we do, if someone is reaching out to us for the first time and they have not taken possession of their aircraft yet, and they're willing to use the charter, we have a dual track contract where what we do is we initially put them into the interstate commerce test, because any charter flight that crosses a state line is for business use, as long as it crosses the state line. The thing you have to be careful of, what you can get confusing, is that any charter flight that starts in California and ends in California, for the purpose of the interstate commerce test, those flights go on the bad side of the test. So if you're going to use the charter test, we try to put you through the interstate commerce test by making you take possession outside of California and follow all the rules of that, because it cuts their test period from 12 months down to 6. And we do not we have a special pricing. Let's say that you're going to pay us $25,000 to do the interstate commerce test, and we start in the interstate commerce test, and you realize that you're not going to meet it. It's going to have to go back to the charter. We add $5,000 at that point, because the basic price for a charter test for 12 months for that same $25,000 contract would be $30,000.
I kind of want to dig into that because it's interesting. What I assume, and you can correct me if I'm wrong, I take ownership of an airplane. I then have to decide basically my own usage, right? Am I going to use this airplane? Am I confident I'm going to use this airplane 60% or more? And if not, do I then say, all right, well, now I need to go with the charter exemption because I think I'm not going to use it that much and I want to charter it more than maybe my own usage. And that's why I decide to go with the common carrier charter exemption. Is that kind of the thinking behind it?
There are some people who feel that way, yes. Not very often.
Is it harder to get the charter exemption? It seems like the same idea,
well, it takes
right?
12 months instead of 6 for one. You're leasing it to a charter company. You have the dangers that I spoke to you about putting it in the hands of someone else. One is not harder than the other. They're both require our constant overlook, because when people hire us, we put them on a monitoring process for every month during the test period. They send us 100% of their documentation for April before the 5th of May. And we review that like it's a 100% of the tax return at whatever point we're at, to make sure they're over the 60%. So we're going to lay the same amount of structure on you and make you support those flights as being exactly what you say they're going to be, because it requires that there are 2 definitions to the word order. First of all, when you're getting ready to buy an airplane and you know nothing about sales tax, it's like standing on the freeway and cars going by you at 100 miles an hour. You have no idea how to do it. So what we do is we take one piece of that, and that's the sales tax thing, and attach to it the charter or the interstate commerce test. And we make that become your stable datum. And then once you understand how to do all that work that we want you to do, then we've put some order in your life. But the second definition of order is you have to be willing to follow orders. And that's the hardest part with aircraft owners, because most of them, we have a lot of clients who try to argue with us about, I'm not going to do that. Don't pay the tax. But you've already paid us and it's non-refundable. So it's not a very smart decision on your part.
What data do you need to make sure that you're doing your job for an aircraft owner? Like what's the data that you ask from airplane owners and operators?
Flight logs, maintenance logs, fuel receipts, business support, that kind of stuff.
And then what do you take it and then you organize it and then you're tracking that use?
That's true. Sounds simple, doesn't it? But from the other, I understand that it becomes complicated when you have to be the one that has to do that. But remember something, you're in control of all the documentation. So we can't do it for you. We do it with you. We'll tell you what we need, and you have to provide that. And before you hire, well, not before, right after you hire us, we're going to tell you all of the things that you're going to have to come up with.
Do you still find that people sometimes have a hard time following your orders?
Aircraft owners tend to be entrepreneurs, and they don't, they do things their own way. And that's probably the one common problem that goes through all of our aircraft exemptions, is the difficulty they give our consultants on providing what they have to, and they've been told what they have to provide. And, if ultimately it comes down to, don't follow what we tell you, but you're going to pay the tax.
Have you had people hire you and not follow what they've done and then ended up paying the tax?
There's no other way around it. It just happens. We have people who hire us and then after that never talk to us.
Until maybe their next airplane, right?
They probably won't call us because they've hired us to do something. and then went out of communication with us. So
Yeah.
I
When you
would
told them,
imagine
hey,
for them to
here's
say,
all the work you need to do.
well, I'm a dumbass. So maybe this time I'll follow your. Yeah, that just doesn't happen.
You mentioned a third tactic or strategy. Am I right? There's
the principal use test, which is the one where there's no business documentation required. It starts with out of state possession, and you have to be able to, through documentation, prove a negative. You have to support that you never entered California at any time during the first 12 months. We use that for most vessels because they can't move fast enough between points.
Got it. Okay. So that's more a vessel. It's not really an airplane. Theoretically, you could use it as an airplane, but
as long as you're willing to never have it in California for the first year.
Yeah, that doesn't sound too fun. After 6 months and you pass, or after the 12 months and you pass the charter, you're free to do whatever you want after that, correct? There's no California theoretically can't come after you for sales tax at that point.
Correct. And it would be for use tax, because with a possession out of state, it's automatically a use tax transaction.
Got it.
In fact, it's probably a good idea for me to explain to you the difference between sales tax and use tax.
Yeah,
because
please.
even though we talk about legally avoiding sales tax, there's no way to legally avoid sales tax, because sales tax is a very narrow definition in California. It has to be delivered inside California, and the aircraft has to be owned by a business who has a California seller's permit. Those two things have to exist for it to be a sales tax transaction. So every other transaction, if it's owned by an individual, if it's not owned by somebody who is has a California seller's permit and it's not in their inventory, it's a use tax transaction.
Want to explain what use tax is then?
Use tax is everything else.
How often are you seeing people transact an airplane in California? I mean, is that happening a lot, that people just like miss this and they buy an airplane and deliver it?
We every Monday morning, we go to the FAA database and download every aircraft owner who's registered in California who didn't own that airplane the week before.
Mm-hmm.
A tremendous amount of them took possession inside California. And the first thing I do is I say, I apologize for not doing a better job of marketing. I should have reached you before you bought this airplane, but I didn't do it. And then what we do is we try to encourage them to get in our database, so that we call them every time we're going to do an aviation tax webinar. And we set them up as a marketing client, so we drip out some of the 4,000 or so videos that we have about aircraft tax. The problem is theirs. And the solution, according to the state of California, is the law and the regulations are published. You got to do this research. And no one does that.
Is there anything you can do if you take possession of an airplane in California?
Nope. Once you've taken possession inside California, it's taxable. Unless you're using it as charter. And normally people who are using planes for charter, those tend to be very expensive airplane. They get in touch with us first.
So you can use the charter exemption if you take possession in California?
Yes. But we try to get you to do the dual track and save yourself some money.
Yeah. It's just so much higher risk by taking that airplane inside California versus outside.
Absolutely. Absolutely.
What's the most expensive tax mistake you think you've come across or someone's brought to you?
Well, it would have to be purchased something like a Gulfstream. Somebody who didn't call us first.
Have you seen that mistake?
My least favorite phone call is somebody who calls me and says they took possession in California, and it's a Gulfstream, because I can't get them out of it, and they're going to owe $6 or $7 million worth of tax on those $65 or $75 million airplanes, and that's horrible for me.
Yeah, it's wasted money, right?
Yeah.
I mean, at least California does a lot of great things with it, right?
In case you don't know how I feel about it, yes.
What are some like the smaller mistakes you've seen people make that end up being bigger financially and tax consequences? Is it not tracking the right way? Or you mentioned, having flight logs that don't match up. Anything else that you just say, this is sloppy or?
The most serious mistake you can make is to not call my company before you buy an airplane. 916-691-9192. That call is always free. I never charge anybody for calling and asking me about stuff, unless I find some way I can save you the tax, and then I tell you how much I'm going to charge you, and you get to decide whether you're going to hire me or not. That I hate to hear that. Oh, I knew about you, but I decided to do something different. Well, and the state of California is making things administratively more difficult for aircraft owners. So a lot of people who are in the similar business to mine now around the company are no longer doing the interstate commerce test. They're doing a thing called leasebacks, where they have two entities and one entity owns the airplane and the other entity rents it from them. And they pay tax on the amount of usage. What they never tell their clients is there's no way to turn that program off. You might eventually, depending upon the usage of that airplane, wind up paying 50%, 60% more tax over time because you can't turn it off. The only way to turn it off is to sell the airplane. And that's a good, I'm glad you made me think about that. When I was doing some research years ago, and I discovered what I thought was a way to turn it off, I wrote to the state of California and asked for a legal opinion about turning off the Regulation 1661, which is leases of airplanes. When someone has gotten to the point where they've paid more tax than the original tax that was due, if you make personal use of the aircraft, that by law stops the test period. The tax becomes due, but if you've already paid more than the tax that was originally due, it just stops the tax. I wrote and asked, and I was told that's exactly correct. I went to a friend of mine who owned an FBO down in Southern California who had a bunch of aircraft that they owned that were using to train people. And I said, let's file this claim. I filed a claim for it, and it was denied. And it was denied by the same person that gave me the legal opinion that said we could do it.
What do you do at that point? Do you spend the money and take them to court? I guess if it's worth it.
Shoot yourself. You just you realize the lack of ethics in that organization. It's like the thing I was talking to you about, the charities.
We were talking earlier about the kind of leaseback structure. What's the idea behind that when people are setting up these leaseback structures? What's their idea behind, like, oh, this will make sense for me or my operation?
Well, it does make sense if you know you're going to only keep the aircraft for a low amount of time or for your usage, because you'll never pay that amount of tax, what could be the total amount of tax. In fact, there used to be a program was run by a guy that was a dealer of, I think it was Pilatus's, I'm not sure, they're in Southern California, where they would sell you an aircraft, and at the same time, you'd be aware of the fact that you're going to step it up to their next highest level, and they'd put this program together because you knew that you were going to sell the original purchase sometime in the near future. So it would minimize your tax. What we do is we reduce your tax to zero. All you got to do is hire us before and follow our instructions. But that whole program makes sense if you know you're going to buy another airplane and you're only going to put 100 hours on it in the year or two that you have it.
Got it. All right, and then you pay by usage. My usage is low, so if I do that, then okay, that makes sense. Is that the kind of sale leaseback 90-day limitation rule?
I don't understand the 90-day limitation. I don't know that I've ever heard that before.
Okay, yeah, it's something like I've heard where there's I don't know the full details of it, but where there's some kind of 90-day lease back limitation. But I didn't know if I was kind of, it was something I've heard, but I haven't really gotten too much into detail. But they could look at this low time lease as a structure, or, I mean, maybe they don't have enough out of state usage. So this is something that they have to do versus doing the interstate tax strategy.
Like I said, I've never heard of that concept, so I'm not familiar with it. It might be what's very dangerous when you start talking about airplanes is there's a IRS definitions of use, and there's a sales tax definition of use, and there's the FAA definitions of use, and they're never ever designed to work like that. So they can have definitions for things that are completely opposed to each other. They go like that. So it shows the danger of getting tax advice on the tarmac from someone who's obviously not a tax expert, because the only thing that they could do is type that, what you said, the 90-day limitation, into Google or AI and find out what it finds for you, and then bother to go through all the things you're going to find, all of them, and then you'll have more understanding. The problem with taxes is the problem with any other specific area of knowledge. If you're not willing to do the homework and study everything, you couldn't possibly know everything.
Yeah.
So the way that I created our system at this company is I went into at that time they were called the Board of Equalization, into what is called all their DNRs, decision and recommendations. And I wrote down every failure point that the state found. And I went through probably 30, 35 years worth of them. Okay. And I just apply them 100% to 100% of my clients. That's why we never fail, because I've got all the viewpoints and all the weaknesses, and it was just covered up. So you got to be careful about thinking you know something, and the problem is that the guy, I don't remember who it was, that said something, that the problem is so many people know things that are just absolutely not true, and it's just, you have to be careful.
Do people come to you and I've seen this a lot more of people selling 50% of airplanes, partnerships, things like this? Does that trigger tax liability if you were to sell 50% of your airplane in some sort of deal?
If you already own a plane and you want to bring on a partner, that is a sale, because it's going to change the registration. You're going to add the partner. Okay. So the answer is, when you sell pieces of airplanes, each piece is a separate transaction, and each piece has to go through a separate transaction exemption.
So again, you get basically restart that process for that piece.
Yep. And it doesn't end the original test period for the original owner either.
The structures are always interesting to me. So if the airplane from a structure standpoint has its own LLC, another LLC owns that LLC, is sometimes how they structure it, right? If I bring on another LLC that owns a portion of it, does the IRS know who's flying that airplane? If one person is flying it, can one partner screw up your tax exemption because that partner's not flying enough? Maybe if you're trying to go for the interstate tax exemption?
Yes, because the test period is based on 100% of the usage of the aircraft, not who's flying it or not who's on board.
Got it.
And you use the term IRS, and again, sales and use tax is state by state by state. IRS okay. is federal income tax.
So it's the California. What's the California entity?
CDTFA, California Department of Tax and Fee Administration.
CDTFA. Okay, great. If I've already owned this airplane and then I've got the exemption, and then 2 years later I bring in a partner, then that restarts for whatever that sale price is. I bought it for 10 million. Now I sell a portion for 5 million to get that tax exemption on that 5 million. the entire airplane has to run through the interstate or the charter exemption again.
Yes. There are some Southern California lawyers, to yet to be none, unnamed, that tell people that they can buy and sell LLCs and legally avoid the tax. That is based on a misunderstanding of the law. If the LLC is a business entity that's filing income tax returns, then it's true because the aircraft is merely one of the assets of the business. But if the only thing in the LLC is the title to the aircraft, it is my opinion that you are illegally evading taxes by using the form of an LLC to transfer title to tangible personal property. And that's been my opinion forever. And I backed it up with legal opinions. If anybody ever tells you that you can buy an LLC and not pay sales tax, ask them, how many times have they gotten a letter from California telling them that they don't owe tax for that reason? In my opinion, it's tax evasion, which means it's subject to fraud penalties.
Do anyone ever come to you for when they're buying a large fraction from NetJets? If they buy a $5 million fraction, is that different than?
Well, the big companies like NetJets, I believe that they operate all those aircraft under charter.
Because 100% of flights are charter, so they have the charter exemption.
I could be wrong, but I think NetJets does operate them under charter.
When someone's thinking about buying an airplane, at what point would you tell someone to give you a phone call?
Now, today, always.
Yeah.
The first time that someone starts even contemplating a purchase of an aircraft, they should call me that soon, because there's things that I can keep them from doing that's going to save them a lot of money. And like I said, the call's free. What's your excuse not to call me? My phone number is 916-691-9192. Call me. It's free.
Do you want to give everyone your website as well?
This is going to be a long one. It's www.aero, A-E-R-O, Marine, M-A-R-I-N-E, tax, T-A-X, pros, P-R-O-S, as in Sam.com. Aero Marine Tax Pros.
Awesome. Tom, I really appreciate it. It was really informative. There were some things that weren't really clear for me from a sales tax standpoint that I feel really confident now. And the easiest thing is I never have to worry about it because I can just call you.
Yeah, and if you don't, you're a dummy.
Tom, I really appreciate it. Thank you so much for coming on. I hope to see you soon. And then if I have any questions or if anyone comes to me, I'm really looking forward to forward them to you so they can save that money, because there's no reason California needs any more.
There is absolutely no reason.
Tom, thank you so much. I really appreciate it.